now with Chris Conway from the Australian Stock Report in Melbourne. Chris, we were talking about gold with you just last week, so talk us through today, because we've seen Newcrest out 2.5% stronger, that share price, though it's been very volatile, very based on the spot price as well.
Yeah, most definitely. Look, I actually thought the numbers from Newcrest were a little bit ho-hum. You know, their copper production was up 12%, not really a major factor. Gold production up 1%. Their costs didn't really change. So nothing significant in the set of results, and really it just reverts back to a play on the gold price. Now, in terms of that, obviously gold has been smashed up pretty bad recently on the back of some US dollar strength, the risk factors around Greece and China subsiding, and of course the data out of China about a week ago or earlier in the week suggesting that China hasn't been buying as much gold bullion for its reserves. So a trinity of factors saw gold prices plunge. I don't think that's something that will continue longer term. The prices will likely steady, and on the back of results that I guess could have been worse for Newcrest today, that's why we're seeing Newcrest higher. Of course, the falling Aussie dollar obviously also helps Australian gold miners too, so that's another factor in play there. Of course, the Aussie dollar expected to continue to move lower will help our local gold players.
They are up about 10% year to date, so, you know, okay, granted those falls and then Adair in December, 2013, you know, you've got to make a comparison based on the 80% correction you've had since the 2010 peak. But what do you make of safety? Just before we get off the stock, they seem to be grappling time and again with issues there. That's always going to unnerve. You know, it's always going to prove a sore point.
Sorry, Carson, I didn't quite catch the first part of that question.
Safety issues for the company. Are you confident that they've got those issues ironed out? Well,
particularly at Lihir, yes, I think so. There's been some consistency there. I think that augurs well for the future. I do think they've got that mine under control. So, yeah, in answer to your question, I think it's more positive than negative on the back of what we've seen out of the results from this morning, and it should bode well for the future.
You've had the PNG death, though, just over the weekend, last weekend. You've got Telfer in WA, a contractor killed in May. It goes on.
It does indeed, but that's not uncommon to all global mining companies around the world. Of course, deaths anywhere, anytime are not good, but like I said, not common to Newcrest, so but I think that's part and parcel of the operations.
The problem is the operations then go offline. PNG is still offline following that death over the weekend.
Yeah, indeed. Again, not uncommon to mines all over the world. There is obviously a risk. I think Rio, from when I was listening to Sam Walsh at their recent AGM, they had 6 deaths at their mines around the world over the past 12 months. So again, not uncommon, not a great thing, don't get me wrong. And Newcrest's track record hasn't been particularly great, but I think it is improving.
All right, well, let's talk Fortescue as well then. That stock off by about 3.1%. What did you make of the production report? What did you exactly take out of it that's new?
Yeah, I think Fortescue needs to be given some credit. They have done particularly well. They have cut their cash costs. Their production guidance was maintained. The caveat, however, for Fortescue is that they need to keep doing these things to survive, and that is really the key point. And the big number that I took out of the results this morning, or the production numbers this morning, was that their all-inclusive cost remained steady at $39 per tonne, and that's really the only thing that really matters. So then again, it becomes a function of the iron ore price, and as you guys would well know, I've been in the show recently talking about the supply-demand dynamics in the iron ore market and the fact that they remain firmly out of whack. That's reinforced by the fact that Rio Tinto recently, and indeed Fortescue today, suggested that their production will be at the upper end of guidance. We know BHP missed by about 10 million tonnes, 340 versus 350 expected, due to some shipping concerns, but they're all producing at the top end of guidance. There's production flooding into the market. There's no more demand coming out of China, so iron ore price is likely to head lower. Fortescue on the margin haven't reduced their all-inclusive costs. I still target 140 for Fortescue, which I know is aggressively bearish, but it doesn't change.
They reckon they can still take more costs out of the business, even at these levels. But you know, they are, as you've acknowledged, they're producing at the top end. They can't get any more production. If they were to cut more, it seems that it's kind of robbing Peter to pay Paul. So that's the kind of catch-22. If you want to keep up with the Vales, the BHPs, the Rios, you know, your production pipeline has to be as kind of you know, runaway as theirs. But they can't go any quicker than this now.
Yeah, exactly right, Carson. A really good point. They can't ramp up their production like the other big boys have, whilst they can still cut costs out, I believe. Like I said, if the iron ore price chases those costs lower, it makes absolutely no difference whatsoever, especially, again, when their all-inclusive price hasn't changed. That was the big one that I think everyone was looking for this morning. It didn't budge. It remains where they had an outlook for it earlier in the year, and I think that's why we're seeing the sell-off today.
All right, Chris, we might leave it there. Thank you so much for joining us, though, with those insights.
No worries. Thanks, guys.
Chris Conway there from the Australian Stock Report.